Good morning, students. Welcome back. So we have been discussing about accounting standards impacting the liability, right? In relation to this, the standard that we picked up last time, that was AS 29. It was in relation to the provisions, contingent liabilities, contingent assets. Okay, so we briefly touched upon this. We didn't cover a lot of aspects in this standard. Okay, so today we plan to continue on this. So, yeah. Further, as regards these liability-based standards, there are a couple of standards on this series, you can say. One is AS 15, that was in relation to the employee benefits, right? And the other one is this AS 29. Okay, so once we are through with this, we'll also look at some questions for practice, okay, during the course of our discussion itself. Yeah, so that's what we plan to do. Now, quickly, let's do a recap of what we discussed in the previous session. So previous session, we talked about some of the features, or you can say some of the requirements of a liability. So when it comes to a liability, so there are certain elements you'll always find therein. Yeah. So can you just help me understand what are those elements, what are those features of a liability? Over to you quickly. So in case of a liability, what do you find? What are those features? Over to you. Yes. So when it comes to a liability, what do you have over there? Okay, great. Rohan says there has to be a present obligation. Past events should be resulting into this present obligation. And what else? I think Soumya is also talking about present obligation. Very good. Then Rohan says it should result in an outflow of resources. And I think same is the response from SP. All right. So now, as regards this obligation, which is arising due to the past event. So it's not the present event. I think one of you mentioned present event. It's about the past events. The important point is the obligation should arise on the part of the entity. Correct? And in relation to the obligation, entity will expect that entity will have to spend some amount, or you can say entity will expect outflow of some resources. Yeah. Only and only when there is an obligation. That is when you record a liability. Yes or no? Because without the obligation, it's just not possible to have this liability in place. Correct? Now, in relation to this obligation, whether it's in the form of a present obligation or some sort of obligation, there are some more aspects which we need to now consider. Okay, what is that? That when it comes to any obligation which is going to arise, so the outflow which is going to happen, the obligation which is going to arise, as to how do you look into these two aspects? And let's try to understand this by differentiating between a liability and a provision. Okay. You can say this is a very important aspect. Why? Because generally, if we look at a liability or if we look at a provision, there's a confusion between these two. So now, before we move on to this point, can you help me understand about the meaning of provision? So how do you define a provision? Over to you. So when it comes to a provision, what is your understanding? What do you mean by a provision? Quickly, any thoughts? If let's suppose you were to define a provision, how would you define it? Tell me quickly. Okay, Devu has answered this very good. Devu is saying it's a liability for uncertain events. Okay, very good. Anyone else? Anyone else? Okay, Rohan says liability which or which may not arise in future. But I think this will be slightly contradictory when you say which may or may not arise in future. Yes or no? Because at one place, if you are calling this as a liability, then it is expected to arise in future. Correct? Then I think one more response I will see. She's saying we expect that liability might arise in future. So we set aside some amount. Okay. Priyanshi says making a pool of amount to meet future uncertain liability. All right, very good. So now let's try to understand about this liability, about the provision. Okay, both these aspects. Now, what is a liability? We have already talked about liability. Yes or no? So we have already discussed liability in a way. Okay, I can see one more response coming from Richa. Very good. She's saying it's measured in advance to meet the future needs. Sure. Now, let's try to understand about the liability. See, liability is what? It's a present obligation. Okay. Arising from past events, something that we have already discussed. Settlement of which is expected to result in an outflow of resources. Correct. So these are the three features of a liability. The important point was to understand in case of a liability that an obligation should arise. Yes or no? Now, if you go back to that obligation, so what does it mean? Any event that creates an obligation, okay, that will also be considered as an obligating event. Yeah. And then we took some examples wherein we discussed as to how this obligation may arise. Now, what is a provision? Provision is also a type of liability. Now, this is a very, very important. Provision is also a kind of liability, but in case of a provision, we have slight sort of problem. So what is that problem? Problem is that we require some sort of estimation in respect of this liability. Okay, now what do you mean by this estimation? And if let's suppose some estimation is required, question arises, if let's suppose an estimation is required. So why do we differentiate a provision from a liability? Yes or no? So this thought could be there that why do you differentiate this provision from a liability? Correct? So let's try to understand this. So what I'll do is I'll just take you to a working file. All right. So the moment we say that we have a liability, but when it comes to this liability, okay, one aspect about this liability is the timing. Second aspect about this liability is the amount. Yes or no? Yeah, because we understood that for a liability, there has to be an outflow of resources. Outflow of resources is measured in the form of amount. Number one. For a liability, we understand as to when that outflow will take place. So we know about it. Yes or no? So when it comes to a liability, for example, trade payable, creditor. For a creditor, do we know the amount which is required to be paid? Tell me. So whenever you will have a creditor, so will you know the amount which is required to be paid to that creditor or not? Answer is yes. Do you require any sort of estimation in respect of that amount? Tell me. Chirandeep says no. Rohan says no. Yeah. Everybody is saying no. Very good. For a creditor, now the other point is, do you know the timing when this amount is required to be paid? Tell me. For a creditor, will you know the amount which is required to be paid as well as the timing? Ishan says yes. Priyanshi is also saying yes. So that means when we talk about a liability, we know both these things. We know amount involved. We know we know the timing also. Correct? I think Almaz, Devu, they have the same answer. Very good. So now we can say that for a liability, these two, they are certain. Correct? They are certain. So we are certain. We are sure about the timing. We are sure about the. But if let's suppose we are not certain about the timing, so we may know that some amount has to be paid, but when is that amount required to be paid? Or we may know that the amount has to be paid maybe on a particular date, but we are not certain in terms of the amount to be paid. Means it could be 1 lakh, it could be 1,10,000, it could be 95,000. So what do you call that situation as? What do you call that situation as? You will call that as uncertainty. Yes or no? So you'll say that in respect of either of them, or maybe both of them, there is uncertainty. If let's suppose there is uncertainty, then what will you do? Will you not recognize that? Tell me, will you not recognize that? What do you think? Priya says we'll recognize. Rohan says in such a case, we will have to estimate. Very good. So now the moment we say that some sort of uncertainty is involved, so what do we require then? We will have to get into the estimation. Yeah, because the certainty is gone. So definitely some sort of estimation will be required. Yeah. And the moment we bring in that estimation, so what will happen? Nature of this liability will change. So then we will not be calling this as a liability anymore. What do we call it then? Provision. In such a case, we'll have to call it as a provision. Understood? Yeah. So there is a difference between liability and provision. And what is that difference? The difference is this uncertainty which brings in the estimation in respect of these two elements about the timing or the amount or both of them. Okay. Now, let's take a very simple example to understand this as to how the uncertainty may be involved or why the uncertainty may be involved. Okay. All right. So let's take an example. Okay, and you need to answer this. Huh? Let's suppose an entity has received goods. Okay, an entity has received goods. Entity purchased goods, it received it. Okay, physically the goods are received. In respect of these goods, there has been an agreement. Okay, so before entering into before executing this transaction, so there was an agreement between both the parties, entity as well as the vendor, vendor who has supplied the goods. Okay, but as of today, okay, so maybe the goods are received today, but as of today, entity has not received the invoice. Invoice is pending. Okay, invoice in this case is pending. Yeah. Now, tell me one thing, that in this scenario, as regards the timing and the amount, do you see any sort of uncertainty? Yes or no? And please explain. Chirandeep says yes. What about others? Divya says yes. Kirti saying yes. So can you please explain, when you are saying there is some uncertainty, so what is that uncertainty? Can you please explain? Ishan is also saying, sir, because the invoice is not received. Uh, then I think Anil is saying, yes, sir, because the invoice is pending. We are saying there's no time and amount involved. I think Kirti is saying invoice is pending. No, no. So my question is that if you are saying that yes, so in respect of timing, in respect of amount, what is that uncertainty? Can you tell me? What is that uncertainty which you can see over to you? So if you say timing is uncertain, amount is uncertain. Okay, Priyanshi is saying because sir, timing and amount are mentioned on the invoice which are pending. But in this case, don't we have an agreement? Agreement is there between the parties. Yes or no? Yes or no? Agreement is there. So in the agreement, amount would have been specified because on the basis of this agreement. Now, what is an agreement? Agreement or PO, they are one and the same thing. In this agreement, amount would have been specified, which the party would also have, which the entity. So let me just say it's A Limited, which has received the invoice, and B Limited is the vendor. Okay, so in this case, so that must be on the basis of some agreement or the PO. So A would be knowing what is the amount of goods which are required to be received, and if they have also received that physically, so A would know whether it has received. Let's suppose the agreement was for 1 lakh. So now when A has received the goods physically, so don't you think A will know whether it has received the goods worth of rupees 1 lakh or not? Tell me. Don't you think so? The answer is yes. Okay. Now, if the goods are received, so will A not be obliged to pay? And will that not be already agreed in the agreement that from the date of this receipt, maybe in 30 days, maybe in 60 days, maybe in 90 days, the payment is required to be done? Will that not be known to A? Tell me, will that not be known to A? Yes. Yeah. So in this case, just because the invoice is pending, do you think A will require any sort of estimation? Do you think so? Do you think so? No. So that's an administrative problem only. You can say it's an administrative problem. Why? Because today the invoice is not received. Maybe in 2 days or maybe in 1 week, the invoice will be received, right? So in this case, when A will recognize this 1 lakh, that the goods are received, so A will recognize this. So will you call it as a provision or a liability? Tell me quickly. Will you call it as a provision or a liability? Liability, of course. Correct? Understood? Now, let's take one more example. Let's take one more example. Okay. See, this is very, very important for you to understand as to what is a liability, what is a provision. Why? Because generally there is a lot of confusion between these two. Now, let's suppose there is a party P Limited. It has sold goods to a customer. Okay, it has sold goods. So goods have been sold worth of rupees 10 lakhs. Okay. Now, when the goods have been sold, yeah. So in that case, there's a term which is attached in the sales agreement. Now, what is the term which is attached in the sales agreement? That from the date of sale of goods, okay, for next just for next 3 years, if there is any problem, if there is any sort of repair, etc., which is required in respect of goods or sold, okay, so P will make good such. So you can say it's a warranty. It's a warranty which has been provided by P for a period of next 3 years, right? Now the question arises that in respect of this warranty, do you see any obligation on the part of P Limited? Over to you. Do you see any obligation on the part of P Limited? Quickly, over to you. Yes. Okay, Devu, Arun, they are saying yes, there is an obligation on the part of P Limited. Right? Now, if you say there is an obligation on the part of P Limited, so can you also help me understand that whether that obligation will have any sort of uncertainty in respect of the timing or in respect of that amount? So Rohan says yes. Then I think she is saying, sir, herein the timing is certain, but the amount is not certain. So they will create a provision. The timing is certain. So can you please explain? How can you say the timing is certain here? Over to you quickly. Maybe you can speak up if you want, yeah, and explain. So that is very, very important for everybody to understand that why is the timing certain? Quickly, waiting for a response. Why do you think timing is certain? Yes, quickly, please explain. One says both are uncertain. Arun says both are uncertain. Okay, Charandeep says both are uncertain. Priyanshi says, sir, the maximum time is 4 years, but still not certain. No, so it's not 4 years. I think it's 3 years. Correct? Okay, so then I think she has explained this. She is saying that it's certain because it will arise in 3 years only. So we have the certainty of the time capping, right? Very good. So Richa says timing is uncertain, but the money is certain. Okay, very good. Richa, can you please explain how do you think amount is certain in this case? Over to you quickly. Richa, can you please explain? See, you can speak up. Huh? If you want, you can just elaborate so that we can get clarity in terms of how do you think this to be certain. Over to you. Quickly. Devu says there is uncertainty. Richa says because the goods are sold. Okay. Now, in this case, now please try to understand that what is the option that is going to arise on part of P Limited. Can you please explain this? What is the obligation which we are looking at in the given case? Over to you quickly. Anyone? Rowan says obligation will be in respect of repair work. Nidhi says that's the warranty. Okay. So of course warranty is there, but warranty will require some repair work. Correct. So let's understand these two. Now on the part of P Limited, because the goods are sold worth of rupees 10 lakhs today. Okay. So you can say two types of outflow of resources are possible. There are two types. Okay. So this warranty can result into two types of outflow. First is the service charge. Service charge means, let's suppose a customer will come to P Limited. P Limited will do the repair. So for repair, some labor charges will be incurred or not. P will have to deploy its people. Yeah. But that service charge, customer will not bear. P will have to bear that cost. Okay. So that's one. Second is that when the goods are getting repaired, so some part may have to be replaced. Yes or no? So for such replacement of part or any of that, sort of element, any costs that will arise, will that be borne by the customer? Answer is no, customer will not bear that cost. Correct? Yeah? Yes or no? So we can say these are the two types of outflow of resources which are possible in the given arrangement. Correct? But to say that whether the customer will come for sure or not, will this be known to P? See, of course, the goods are sold. So the goods may require some repair. But is it a certainty that goods will definitely require some repair? Ishan says no. Yes, Arun. I think Arun wants to speak up. See, whenever you want to speak up, please raise hand. Okay, so that we'll get to know about it. Yes, Arun. If you want to speak up, please speak up. You have some point over here. Arun. Yes, Arun, please pick up. Please go ahead with your query. Yes, Arun, waiting for a response. Arun. Arun, you can just raise hand and no, so please speak up. So yes, Arun, please go ahead. Manish, can you please look into this? So I think done. Yeah. Yes, Arun,
Good
please
morning,
go
sir.
ahead.
Sir, what I was telling that when we purchased a good, then we are getting warranty, and at that time the company's obligation is to take care of each and everything while the covering the whole warranty period.
Correct.
So there is always an uncertainty because the amount of the part can be uncertain. The time when the warranty we needed to cover, that is also an uncertain time period.
That's correct. Absolutely correct. And tell me one more thing. Okay, so now in respect of these two charges or these two types of costs, okay, so which we are looking at, do you think, in fact, everybody else can also answer this, do you think company will be sure, P Limited will be sure that these two costs are definitely going to arise in the next 3 years? Tell me, tell me, what do you think? The answer is no, there is no surety, correct? So that means surety is not there. Number one. Number two, if let's suppose P Limited expects that out of 20 customers, say 3 customers will require some repair or some parts to be replaced. Let's suppose P Limited has built that expectation. In such a case, do you think P will get to know that whether those 3 customers will come in the first year, second year, or third year? Do you think that will be possible? Rohan, Ishan, Richa, they are saying no. Charandeep, Soumya, Devi, they are saying no. Okay, Kirti Nidhi, they are saying no. Very good. So therefore, in this case, what do you have? In this case, we have a situation wherein both the elements are uncertain. Yes or no? Both the elements are uncertain. So in such a case, when you have both the elements as uncertain, what do you need to do? Tell me, what do you need to do? You will have to estimate that. Yes or no? So you'll have to estimate that. So that estimation will be required. Correct? Yes or no? That estimation will be required. So this is a case of a provision. So when you estimate and recognize this amount, let's suppose P Limited has estimated that this amount should be rupees 50,000. So in this case, can P Limited say it's a liability? No, it's not a short liability. So that's why what will P Limited call this as? A provision. Okay, so this will be considered as a provision. Clear? Yeah, great. So I think Arun, Soumya, they are also calling it as provision. Okay, clear on this? Yeah. Anyone? Any questions? Any doubts so far? Over to you. If you have any questions. Yes, waiting for a response. Any questions? Any doubts if you have? Okay, so Pawan is saying no questions. Arun is saying no questions. Everyone clear? Okay, Charandeep has a question. He's asking, sir, can we say provision is a future obligation of present event? No. So you should also consider this to be a liability. Okay, similar to what you understand about a liability. Past event resulting in future obligation. The only thing is now you will attach couple of things. What are those two couple of things? One, amount, Second, timing. They will become uncertain. Clear, Chandeep? Okay, so Priyanshi has a query. So Priyanshi, can you please explain your query? Can you please pick up? Over to you. Over to you. Yes. Yes, Priyanshi, please go ahead.
Yes, good morning.
Good morning. Yes,
Sir, I was
Priyanshi.
asking about these two service charges and part replacements. Sir, it should be guarantee, no, that if anything mishappen within 3 years, so the part will be replaced and service will be provided.
So your query is around the difference between a guarantee and a warranty. Is it?
Yes, sir. Yes.
Okay. See, this is more of a legal matter, and generally, this is how, this is something which you need to understand on the basis of the terms of the contract. In the given case, let's understand as to why we are not calling it as a guarantee and instead of warranty. See, guarantee is something wherein, if let's suppose there's any problem in the future, so you don't repair that, okay? And you don't replace some of the parts, you replace the entire product. That is what you call as a guarantee. So that's how guarantee is defined. But warranty is something in which case the product is not replaced. Instead, the company will take care of it. Means company will do the repair work, etc. For example, if let's suppose you go purchase a mobile phone. Okay, Priyanshi.
Yes, sir.
Now, if let's suppose you have a period of 1 year and a guarantee is given. So within that within that period of 1 year, if you go to the maybe the vendor from whom you have purchased. So in case of a guarantee, the vendor will be obliged to replace the mobile phone. So your complete mobile phone will be replaced. So that's what you call as a guarantee, which is not. So generally, you don't see any guarantee on any of the products these days. Instead, what do you get? So you will get some repair. So if let's suppose you have a problem in the mobile phone, so the vendor will ask you, okay, you can just keep it here. Okay, I'll look into it. I'll do the repair. If any part is replaced, I'll do that repair work. Parts also I'll replace, but he'll not charge you anything. Yes or no? So that's what you get to see.
Yes.
Correct? That is what you call as warranty. That is not guarantee. Okay, so that's the difference between these two. Clear? Now,
Yes.
depending on the type of arrangement it is, an accountant has to pass the accounting entry. Yeah, so that's why we as an accountant, what are we trying to look at? That for us, what is going to be the estimated outflow of resources? So we have to estimate that because we'll have to record that. Clear?
So in guarantee, is it possible that say warranty is uncertain that it will happen or not? Say it is of 50,000. So in guarantee, it is possible that it could be certain that the guarantee, मतलब अगर if any problem happens, so it have to give 50,000 anyhow.
You tell me, will it be possible? Let's suppose you have purchased a mobile phone. Okay.
Yes.
And the terms are, so when you went to the shopkeeper, okay, so the term was that you have this guarantee for 1 year. Instead of warranty, you have this guarantee for 1 year. So in such a case, do you think, but this guarantee will apply only when there's a problem in the mobile phone. Okay, it has to be a general problem. It should not happen that you just bang your phone. Okay, you want a new phone, maybe after 6 months, you'll just, intentionally damage it physically. So now, okay, so it has to be something which has happened on its own. So in that case, do you think shopkeeper or the vendor will be certain, or he can be certain that now because the guarantee is attached, so that's why this mobile phone will definitely require some repair, and that's why the customer will definitely come to me within a period of 1 year? Do you think it's possible? You tell me.
Very rare chance because product is new, so it's very rare chance that it will damage or something.
So whether it's new or not, of course, the certainty is not possible. Yes or no? Certainty is not there. Correct?
Yes.
On the part of the vendor. Because how will he know whether the product will require some repair or not? Yeah. So the same goes with the guarantee also. So uncertainty will be attached there. And the moment you say uncertainty is attached, where do you go? You get into the provision instead of liability.
Yes.
Yeah. But please remember, whether it's a provision or a liability, both are required to be recognized. The only thing is we are just trying to understand as to how do you define a provision, because generally there is a lot of confusion between these two. Interchangeably, these two are used. Fine.
Yes. Thank you.
Sure. Right. Any more questions? Okay, so I think Nidhi tried to answer this. Very good. Now, Anil is saying, sir, is there any specific percentage for create? Anil, can you please again explain your query? Huh? Anil, can you please speak up? Can you please explain your query? Yes, Anil. Okay, so it doesn't seem to be there. Charandeep is asked. Okay, I think Charandeep has explained this. Liability provision, they are present obligation because of past events. Yeah, but since there's some sort of uncertainty involved, that's why you call it as provision. Yes, that's correct. Nidhi is saying these situations are only for sale, or you'll also have this in case of purchase. Nidhi, you explain me. Yeah. So in case of a purchase, do you think such a situation is possible? The answer is not really. Why? Because these type of arrangements you'll have to look at. See, let's not try to just cram this. Let's try to understand the entire arrangement. We need to understand what has been the past event, which is expecting to result in an outflow of resources. In the given case, what was the past event? Sale of goods. That sale of goods is expecting to create an outflow of resources. Okay. If you believe that when you purchase something, so that's a past event, there is expected to be an outflow of resources. So that's how you will have to analyze it. Okay. So every time, what do you check? The same way you check it, and the same things you check it. Clear? Nidhi, clear on this? Yeah. So there is no standard answer to any of these questions. Every time you need to look into the situation, you need to understand the terms involved, and you need to then analyze whether an obligation will be created or not. The important point is obligating event, or you can say an obligation to arise. Whether you can estimate that or you'll know that by certainty is a separate matter. But obligation has to be there. Clear? Clear on this? Ron says obligation of warranty arises as soon as the sale is undertaken. Yes, that's correct. Okay, so Nidhi is clear on this. Very all right. So now moving further. Okay, Anil, can you please explain your query? Can you please speak up? I think you still have this query, but you're not speaking up. Anil, please go ahead quickly. Please explain your query. You please raise hand. So I would request everyone. So whenever you have any query, so please raise hand. Okay. So the moment you will raise hand, we'll get to know about it, and that's when you will be put on unmute. So yes, yes, Anil, please go ahead.
Sir, my query is actually when we are creating provision, it is completely uncertain, right? Like even if you use past historical data, if if company invests some more, I mean, uh, we cannot estimate clearly, right? Is there any specific percentage for each company, like in standard specified any percentage?
Okay, so I think you are looking at that sort of certainty as to how do you estimate that, is it?
Yes,
Or
sir.
the criteria. that how will you estimate that amount? Is it?
Yes, sir. What standard speaks regarding this?
Okay, sure. See, as far as the standard is concerned, standard doesn't give you any sort of percentage. Okay. In fact, not only in this standard, in any of the accounting standards that we have, so percentages are not defined. For any of the situations, you will not have a percentage. So that is a matter of your judgment. Understood? You will have to apply
Okay.
your judgment. And in fact, even if we talk about a percentage, let's suppose we say it's 75%, 80%, that percentage again will be what? That's a matter of judgment only. If let's
Yes.
suppose P Limited believes that there are 80% chances that two customers will come and ask for repair work, which will result in a cost of rupees 50,000. So in this case, this 80%, what will you call it as? That is again the judgment on the part of the management of P Limited. Can you say that 80% is also 100%? Correct? Yeah, so that 80%,
No.
when you are saying
Sir,
something
in that
90, that is again not certain. Yes.
Sir, in that case, management can do some fraudulent activities like hiking profits, etc.
Yes, you are correct. See, the moment we bring in any sort of judgment, or you can say when any sort of estimation is required, or you can say in case of estimates, to be very precise, whenever any estimates are involved, so definitely manipulation is possible. Now, whether that is done intentionally by the management with an intention of fraud, yes, of course, that is also true. Management can do that. But there again, okay, even though the standard is not giving you the percentage, but the criteria is always available and the judgment is expected to be the best judgment possible. Yeah. So one can always say that this warranty should have been rupees 50,000. Other person may say that this warranty should have been 55,000. Okay. So when you move, so this movement has to be within a range. If let's suppose there's a person who says that this warranty provision is not possible at all, okay, or my estimation is that it has to be only rupees 5,000. Why? Because he doesn't want to bring in this cost at this point of time and thereby increase the profits. Okay, so that's where he is not following the requirements of the standard. Okay, so even the criteria, the guidance is not being followed. So that is where definitely manipulation is possible. You are absolutely correct.
Okay.
Okay,
Thank you, sir.
sure. All right. Any more questions if you have on this? Anyone else? Richa says it depends on the event. That's correct. Okay, so now let's move further. And now what we will do is we will also bring in one more element of a contingent liability. In fact, this standard talks about three things as we discussed: provision, contingent liability, contingent assets. So now what we are going to do is we are going to discuss certain situations. Okay, one sort of, you can say, an analysis will do, through which we'll try to understand all of those requirements of the standard. So you can say, in a way, we are going to cover the overall requirement of the standard with this analysis that we are going to cover now. Okay. So this analysis is very commonly called as PPR analysis. Now, what is PPR? Probable, possible, remote. Okay, so probable, possible, remote. So that is what you call as PPR. Now, how is this relevant to us? How is this relevant to the accounting requirement? Let's try to understand this. So let me take one example. I think through the example, we'll get some more clarity on this. Let's suppose there's a company which has received a demand from income tax. So say there is an income tax demand of rupees 70 lakhs. Fine. Now, as regards this demand which the company has received, okay, so the company wants to evaluate this. And generally, when you look at the companies, okay, so they will not accept the demand as it is. They will do their analysis. Analysis means they will look into the merits of the case, the matter which was involved, what has been the reason of that demand which has been raised. And for doing this, companies have got their own experts. Okay, so if you talk about large companies, they have their own experts. They have their own team of taxation experts in-house as employees of the company. So they will do this analysis. For the companies who do not have their experts in-house, they can always reach out to the external consultants. For example, chartered accountants like yours. Now, all of those experts, whether those are in-house or those are external, what do? They will do an analysis of that particular matter. Correct? Now, when they will do the analysis, so they will also come up with an outcome. In this case, what is the matter involved? Company wants to evaluate whether this demand raised by the income tax is correct or not. Correct in the sense, means, does it have any sort of merit or not? Because if it doesn't have any merit, okay, technically it is not correct, or maybe there is some room through which this demand may be dropped, then what can happen? Company can get into a litigation. Yes or no? So company can file an appeal, company can get into the litigation. Okay, so that's what the company will decide. In this case, three outcomes are possible depending on three types of analysis. Let's try to understand all of them one by one. So the first analysis is, so now who has done this analysis? Of course, the taxation experts. So they may say that this appears to be a good case, means the demand seems to be valid, okay, reasonable. And if the company plans to get into a litigation, so what will happen? Company will lose the case. Okay, company will lose the case. If let's suppose that is their assessment, means company should be paying this amount. In a way, correct? Now, let's try to understand the meaning of probable. Can somebody explain what is the meaning of probable? Any thoughts? Anyone who knows about meaning of probable? So how do you understand probable? Over to you quickly. See, this is a very, very important discussion. So you can say it's the crux of the standard that we are discussing right now. Arun says either or neither. Okay. Devu says may or may not. Deepika says possibility is 50%. Rohan says probability means bound to happen. Okay, great. I think I missed out some responses of yours. So what is probable? Probable means something which has chances more than 50%. Means it's more likely than not going to happen. Now, what is more than 50 is not defined in the standard. It can be 60%, 70%, 90%. I think this was one of your query also. I think Anil asked me the same question. This percentage has not been defined. Yeah. Important part is that there is a greater chance of occurrence of this event. So now there is a probability that if the company gets into a litigation, it will lose the case. So whenever it is probable, okay. Now in this case, if let's suppose company has hired an external consultant. So if you reach out to external consultants, they don't give you percentages generally. So they will not say that there's an 80% chance you'll win, there's 20% chance you'll lose. So that's not how they generally write. In some of the cases you see that, but generally they don't use such words. Okay, if let's suppose it's more likely that company is going to lose the case, then what is it that the company is required to do? Company is required to recognize this amount. What is the meaning of recognition? Means as a provision. Means in this case, company will have to create a provision. That is the meaning of recognition. Okay. Next, another situation which is possible. Let's understand that. Another situation is when it is possible. Now, what is the meaning of possible? Can somebody explain? What is the meaning of possible? Over to you quickly. Rohan says 50-50. Richa says not certain. Almaz says lower than 50%. Richa says to happen. Deepika says happening or not. Okay. Devu says more likely. All right. See, possible is when it's 50-50. Okay. It can go either way. It's 50-50. It can go either way. Now, sometimes there are some matters over which, okay, and this is something which you very, very commonly see. Sometimes what may happen is some of the demands may be raised, some of the matters may be involved. So if you look at those matters on the basis of the fact pattern, which the company will have at a certain point of time, company may not have much clarity as to whether they will win the case or they will lose the case if the company gets into a litigation. Okay. So the consultant will say, as of now, we are not sure. So there's a 50-50% chance. You may lose, you may win. Okay. So he's not saying that you lose. At the same time, he is not saying that we are sure that we are going to win. So that is what you call as a situation of possible. Okay. So in case there is a possibility, it's not probable, it's only possible. Then what do? You'll not recognize. You'll not recognize this amount. Instead, what will you do? This amount will only be disclosed. Disclosed means there will only be a disclosure in the financial statements in respect of this amount. So in the financial statements, in the notes to accounts, company will disclose that there is a contingent liability amounting to 70 lakhs. So this is what you call as a contingent liability. Okay. So in this case, company will not recognize a provision. What will the company do? Company will only disclose a contingent liability. Clear? Clear? Next, third situation. So let's talk about this third situation also. And then of course, I'll come to your queries also if you have. Remote. Now the third situation is what you call as remote. Now what is the meaning of remote? I think you can estimate this meaning now. Any thoughts from your side? Great. Richa says remote means work done in a location. So she is saying offline when you do the work. Okay. Rohan says less than 50%. Nidhi says control. Ishan says not likely to occur. So what is the meaning of remote? Charandeep says chances are very less. Devu says something which is far away. See, remote is something, okay, wherein you will say the chances are, means chances of occurrence of an event are low. Okay, yeah. So there is a lower chance of occurrence. Or you can say something which is less likely to happen. Okay, so it's less likely to happen. You can say it's opposite to what you have in case of proverb. So now the consultant says in that third situation, what will the consultant say? Now the consultant will say that chances of losing the case are remote. Means company is going to win the case. Or you can say chances of winning the case are strong. So chances of losing are remote. Means minimal. Now here again, what is less than 50% is not defined. Okay, so you can't define that what is less than 50%. Whether it's 10%, 20%, 15%, 35%, we don't know. All of these are what? Judgmental. Please understand, all of these are judgmental. One has to apply the judgment. So that's why these analyses are not very simple. They are not very easy. They require some sort of judgment to be involved. Okay. So in this case, when we say that the chances of losing the case are remote, so what will the company do in its books of accounts in relation to this demand? Nothing. Okay, nothing is required to be done in this case. Company will neither record this as a provision nor disclose this as a contingent liability. Now you may be thinking, but sir, will it not be appropriate to give an explanation in the financial statements that the company received a demand and the chances are lower? No. See, the moment you say it's remote, okay, so you will not be required to do anything. Yeah, so the company is not required to do that. Unnecessary disclosures in the financial statements should not be done. Okay, clear on this? Yeah. So we can say that through this analysis, we have broadly covered most of the requirements of this accounting standard also. This standard is largely about these things only. And now what we will do is we will be looking at some questions to understand about all of these aspects in more detail. But before that, any questions, any doubts that you have so far, let's discuss that. Okay. And then I'll move on to the questions. Okay, Arun is asking, sir, please explain contingent liability. Okay, sure. So let's understand this contingent liability. Okay, so we are talking about this situation. Arun, let's suppose the company has received a demand. Fine. So there are three things company is supposed to do. Either to pay that or not to pay. Company will pay that if the company is sure that there is no option to avoid this amount. Correct? Not to pay will again be done when the company is sure that amount is not required to be paid. So that means to pay is about getting into probability. So when it is probable, not to pay is when it is remote. But sometimes company may be confused. Company means management, people involved. So whenever such matter will come up, so that matter will require a discussion. Yes or no? Why? Because the amount is too heavy. Yeah. And in fact, I have only put this into lakhs. This may be running into crores. And sometimes it may be going beyond crores also. Yeah. So it's a very important analysis which the company is required to do. And sometimes some of the matters may be very tricky. Tricky in the sense that legally, if you analyze them, okay, some of the matters may require some interpretation of the law, okay, over which there may not be any precedences in the past. Yeah, and over which there can be an issue which not only this particular company is raising, maybe all the companies within the industry are raising that point. Yeah, so sometimes some of the matters could be very tricky. In which case, company may at this point of time, okay, so when the company is analyzing that, or maybe you can say at a particular period of time, means for a particular financial year, company may not be able to assess that whether that demand is likely to be paid or not. See, whenever such demands are raised and when the amounts are significant, so companies decide to get into a litigation. You understand litigation? Yeah. Litigation means company will want to fight for that. Okay. Company will appeal. And for getting into that litigation also, company will do this assessment. So let's suppose management is talking to a taxation expert. Let's suppose, Arun, you are a chartered accountant. Okay. Company is talking to you that, Arun, please look into this matter. Okay. We have received this demand. We don't know whether we should pay this or not. So you are asking for the documents. You are saying, okay, show me the demand and show me the matter. Okay, show me your documents. So you have gone through all the documents. Okay. And depending on the legal requirements. Now, what does it mean? So you have gone through the Income Tax Act. You have gone through some of the legal cases which you have had in the past. as a reference. Okay, so that's how this analysis will be done. Let's suppose you're not sure. Okay, you are the taxation expert, you're not sure, and at times it's possible. Because what is your role? You have to advise the company whether to get into the litigation or not. And you are telling the management, see, at this point of time, I cannot say with surety that you are going to win the case. At the same time, you are also telling them that, again, I'm not sure that you will lose. Okay, so there are only three possibilities. Either management will lose or they will win. Or the third is when you are not clear about these two. So you're saying it's a 50-50. It's a tricky matter. Yeah, it's a tricky matter. So you may lose or you may win. But at this point of time, on the basis of the information which is available at this point of time, okay, please understand, at this point of time, on the basis of the situation, on the basis of the information, what you have been able to advise is that it's 50-50. Yeah? It can go either way. So that's where the management is required to not recognize that. See, the recognition is required when there is a probability. But now probability is not there. Now there is a possibility. So when there is a possibility, not a probability, so recognition is not possible. Okay, recognition will not be done. So what will the management do? It's an important matter. Amount involved is high. So management will have to disclose this in the financial statements and to call it as a contingent liability. Contingent liability means this liability is a contingent upon some events. It is contingent upon some events, occurrence of which is not known at this point of time. A contingency is attached. So there is a liability, but a contingency is attached to this liability. So that's why you have not been able to ascertain the amount or the timing. And you have also not been able to estimate the amount or timing. Even if you estimate the amount or timing, that remains contingent. There's a contingency. Contingency is what? That will be known in future, at a future point of time. Yeah. So that's a disclosure you will do in the financial statements. Clear? So Arun is clear. Nidhi is saying in module probable outflow of resources. Dono same hai sir. I'll have to look into it as to what you are referring. Okay. As of now, I would request you to please focus on what we are discussing right now. Yeah. Any questions, any doubts that you may have, please let me know. Ron is asking, sir, in the remote case, it's the contingent asset. No. See, contingent asset is about an asset. Okay, that is different from it. So please do not associate anything on your own with all of these things. Yeah, so please don't bring in contingent assets over here. So in case of a remote, you don't disclose it as a contingent asset. So there's no asset. Yeah, in case of a remote thing, you don't do anything. Yeah, nothing is required. Nothing means you'll just read the document and full stop. You will not do anything in the financial statements as far as this matter is concerned. Clear? Yeah, Rohan, clear on this? Nidhi is saying, I have a doubt. Income tax demand 70 lakhs are to be changed. Nidhi, I am not clear on your query. Can you please explain? Can you please speak up? Over to you. Yes, Nidhi, quickly, if you can just explain your query. Yes, Nidhi, quickly, can you please pick up? Fast now, please. Yeah, quickly, please speak up. Raise hand. So once you raise hand, I think the team will get to know about it and they will put you on unmute. Yes, Nidhi, please go ahead. Please pick up.
सर माय क्वेश्चन इज द इनकम टैक्स डिमांड जो है वो
Can you please
हमेशा
a bit
70
louder?
लाख
Uh, bit louder, please.
सर अभी आवाज आ रही है
Yes.
सर मेरा क्वेश्चन ये है कि इनकम टैक्स जो डिमांड है वो ओनली 70 लाख के लिए ये इसका पॉसिबिलिटी है या फिर और कम या ज़्यादा भी हो सकता है
See, as of now, we are looking at only one matter, and this matter requires an amount of 70 lakhs. But for this income tax demand, I'm not saying that this demand will always be 70 lakhs. Okay, it can be any amount. It can be 1 crore, it can be 20 lakhs, it can be 50 crore. Okay, so any amount could be there. It's only an example that we are referring here. Fine.
तो सर अमाउंट चाहे जो भी रहे प्रोबेबल और पॉसिबल और रिमोट कंडीशन ये फॉलो होगी
What do you mean by condition?
सर जैसे प्रोबेबल में लेस देन 50% है और
Probable में less
पॉसिबल में
than नहीं
50
है. Probable means more than 50%.
मोर देन
Okay.
50%.
So you can say, if you have to understand, so probable, so whenever you will have this probable, yeah, so probable will always require a provision. Possible will
जी सर
always require a contingent liability to be disclosed, and remote will
जी सर
require nothing to be done. So that's how you need to summarize this part. Maybe a bit more if you want to further summarize this. Okay.
डन सर
Yeah. Okay. Yes. I
जी
think
सर
Rohan has a query. Yes, Rohan, please go ahead.
Sir, in the remote case, you said that if there the chances of losing are very low. So,
Yes.
so another case may also arise that if chances of winning are very low, can we
Yes,
include it
that's
here
correct.
also?
Sorry.
Can we include that also here?
So that's one and the same thing. Huh? So if let's suppose you say that chances of winning are very low. So where do you go then? Go to this situation probable. Yes or no? Yeah. So that's one and the same thing. Either to say chances of losing are very high or winning are very low. That's one and the same thing. Yes or no?
Yes, sir.
Yeah. Okay. So either way you can understand it. Similarly, when you go to remote, so therein you are saying chances of winning are very high, losing are very low. So that's why you are not doing anything. When you go to possible, you are saying chances of winning and losing both are equal. So that's why you are disclosing a contingent liability. Okay.
Okay, sir. Yes, sir.
Yeah. So they are all linked to each other. The moment you say winning is low, that means losing is high. The moment you say losing is low, that means winning is high. Clear? Then I think I see one more query coming from Anil. Yes, Anil, please go ahead. Yes, Anil. Anil, please go ahead. Yes.
Sir, in case management decided to consider it as a remote one of a income tax demand, but it happened to be, I mean, in near future, income tax demanded a tax liability. In that case, how will management proceed further? Like,
Okay. So now you're saying that let's suppose in a particular financial year. Okay. So your query is, say management received this notice, say in 23-24. Okay. And that is when the management found this to be remote. So that's why they didn't do anything in the financial statements. Correct? Now,
Yes, sir.
let's suppose in 24-25, you are saying company actually lost the case. Okay, company got into a
Yes, sir.
litigation and company actually lost the case. And if the case is lost, so the demand is actually required to be paid. Okay. So what should the company do? See,
Yes,
as
sir.
far as your financial year 24-25 is concerned, now because the company has lost the case, so company will decide whether the company wants to get into a higher authority or not. If the company
Yes, sir.
believes company wants to get in a higher authority, again the company will do similar sort of assessment. Okay, let's suppose earlier it was income tax appellate tribunal. Now the company wants to get into the higher court, say high court. So there again, company will do same sort of assessment. If the company still believes it will be remote, they will not do anything. Okay. But if let's suppose company believes no, we have lost the case, so now the chances are we are going to continue to lose. So that's where they will have to create a provision. Okay.
Okay.
So every
In the
time
next
company will have
financial year,
to,
right?
every year company will have to reassess. That's the point.
Okay, sir.
But in this case, okay, coming back to your query, to say that in a particular year company was finding this to be remote, which has actually turned into a liability. Okay, so to get into these two extreme situations, we'll put a question mark on the assessment of the management. That in the financial year 23-24, was the assessment of the management correct or not? Because if that assessment was not correct, then you will have to call it as a prior period error. Okay. Yeah. So that sort of implication one have to do, because to say that assessment may go wrong may require some change, but it's a significant change. From zero liability, you are recording, okay, the complete liability. In fact, you didn't even disclose it as a contingent liability. So there are two extremes. So these two extremes you generally don't get to see practically. Okay, that will require maybe the management intentionally ignored this. Okay, which is a kind of error which has happened in the previous year and which will require rectification in the current year. Okay, and there is a standard on prior period errors that will get sort of
Comes into the
triggered.
picture. Yes.
Okay.
Yes, sir. Okay. Thank you, sir.
Sure. All right. Any more questions on this? Any more questions on this? Ashada is asking, sir, in the exam, do we need to write a note? See, of course, if let's suppose a question is there and you find the chances are going to be low, means it's a remote situation. So you'll have to explain that it's remote and that's why no accounting requirement will be done. So that's how you'll have to explain. Okay, but of course, you will not say a note is required to be disclosed in the financial statements. Clear? Clear on this, Ashita? Yeah? Everyone clear? Then I think we can look at some questions. But before that, let's take a break now. Yeah? All right. So let's take a break, and after the break, we'll move on to some questions around this. Fine. All right. Mani. Okay. All right. So now let's pick up some examples. So just give me a minute. Okay, so if you look at this example, a customer of XYZ has filed a case against them for providing them wrong product and not returning the same. XYZ has taken legal advice from their lawyer, who believes it's not probable yet that the resources may be required to settle the same. Since it is not meeting all the criteria of a provision, what do you call it as? See, it's not probable. So that's why you will call it as possible. Why? Because whether it's remote, again, it's not specified. Okay. So what will you do? You will disclose this as a contingent liability in the notes to accounts. Okay. Now, if you look at this material, okay, so now you are given this flowchart. This flowchart is all about that PPR analysis that we have done. Okay. But this flowchart, you can say, is a summary. It's a good summary. Of course, one that we have done on the working file. Other one, you have this in the study material. Either way, you can use it. Okay. So that's this summary, you can say, covers this complete standard in a way, in respect of all the three requirements that you have. All right. Okay, so now let's look at one more example. Just a minute. Let's look at one more example. Exos Limited is in the process of finalizing its accounts for the year ended 31st March X2. Company seeks your advice on the following. Okay, so we'll also discuss this one by one. First one, company's sales tax assessment for the assessment year X1, X2 has been completed on 14th Feb X4 with a demand of 2.76 crore. So you can say there's a demand of sales tax of 2.76 crore. The company paid the entire amount under protest. Under protest means as per the requirements of law, you are required to pay that amount, but you can always go into litigation without prejudice to its right of appeal. Company files its appeal before the appellate authority, wherein the grounds of appeal cover tax on the additions made in the assessment order for a sum of rupees 2.1 crore. In this case, how will you record this? Please don't look at the solution. Huh? It's very, very important you don't look at the solution. Yes, try to answer this. In this case, what will you do? So there are three things you need to remember. Probable, possible, remote. Accordingly, you need to answer this. Over to you. Over to you. So what is going to be your assessment in this case? Quickly. In the first one, what is your assessment? Is this probable, possible, or remote? Quickly, huh? What is your assessment in the first one? Okay, so then I think I got one response. She's saying it's remote. Anil is saying it's probable. So alongside probable, alongside remote, you can also let me know the accounting requirement, please. Huh? Devu says probable. Divya says probable. But you can also tell me the accounting requirement alongside. What do you quickly? Quickly, what will be the accounting requirement? See, of course, probable, possible, remote, you can say that. But how will the accounting be done? That's what you need to clarify. Devu says it's a provision. So therefore, this will have to be recognized. Okay. What about this? Jendra says 0.66 crore is possible. Ishan says it's probable. It should be recognized. Harshda says entire amount is possible. Anil says probable. So the provision should be created. Mohammed says 0.66 crore will be recognized as a provision. Remaining amount will not be recognized. Soumya is saying it's a contingent liability. So I can see everyone answering completely differently. Okay, which is quite surprising. Okay, a lot of responses I can see. Yeah, so let's try to understand this. Fine. See, in this case, what is the total matter? This total demand is for 2.76 crore. Yes or no? Out of 2.76 crore, company has went into an appeal. So the company has gone into a litigation for 2.10. So what does it mean? For the remaining amount, company has not filed any appeal. So means company has accepted that liability. Yes or no? So for the amount for which there is no litigation at all, what would it mean? What would it mean? That's given. That's accepted on the part of the company. Yes or no? Tell me quickly. So 0.66, which the company has accepted. Okay, so that is absolutely not a problem at all. Why? Because it's clear company has accepted this as a liability. And also paid this. So should this be a matter of our discussion? Not at all. Why? Because 0.66 will get recorded as an expense, which has also been paid. Correct? So that means the only matter for our discussion will be what? 2.10, over which company went into a litigation. Now the company has filed a litigation. Okay, but the question has not specified anything. Okay, so the question has not specified anything. Yeah. What are the chances, whether the company is going to lose, whether the company is going to win? So there is no clarity. Yeah. So when the question is silent, what do? You will assume. Okay. See, one thing is for sure, that if the company has gone into a litigation despite paying the entire amount, so definitely it cannot be a provision. Otherwise, why would a company want to get into a litigation? Yes or no? Okay. Now, therefore, in this case, what should you say? It should be disclosed as a contingent liability. It should be disclosed as a contingent liability. Yeah. Now, in relation to the amount which is paid, now the question arises, but sir, they have paid this entire amount. So now please try to understand this conceptually. When the amount will be paid, what is the accounting entry company will pass? Loans and advances. Okay, so there's a head loans and advances under which company will group this amount. So this is a demand paid under protest. This will be debited 2.76 to bank 2.76. Okay. First of all, this is the accounting entry company will pass. Now the question arises that this amount which the company has paid, should this be recorded as an expense? The answer is yes. So now out of this 2.76, what will the company do? Company will record an expense 0.66 and this much amount will be removed from loans advances 0.66. Okay, this is the second accounting entry. Third, no accounting entry will be there for third one, means for 2.10. Why? But that is not getting recognized. For third one, in the notes to accounts, there will be a contingent liability for 2.10 crore. Clear? Everyone clear on this? Quickly. Everyone clear? Yes? Any questions on this? Clear? All right. So let's look at the next part. Okay, so part number 2. For the financial year X1, X2, company has entered into a wage agreement in May X2, whereby the labor union has accepted a revision in wages from June X1. Agreement provided that the hike till May X2 will not be paid to the employees, but will be settled to them at the time of retirement. Okay, settled to them means it will not be paid today, it will be paid at the time of retirement. The company agrees to deposit the arrears in the government bonds by September X2. So in this case, what will you do? Over to you. Quickly. What will be the accounting requirement? Over to you. Tell me quickly. What will be the accounting requirement for this second situation? Quickly, huh? So how will you record this? This second one. So there's a settlement with the union which the company has done, and the company is not supposed to pay this immediately. This payment will be done in future. Okay, and as against this amount, company is also planning to deposit it somewhere. Rohan says create a provision. Ishan says that there is no timing or amount difference and it will be a liability. Very good. Charandeep says it's a provision. Soumya says provision has to be created. But can you tell me for what period provision should be created? For what period? Devu says it's a liability. Okay, so let's try to understand this one as well. So once again, what I'll do is I'll just get onto that working file. Now we have a scenario wherein the company seems to have agreed for a liability. Why? Because there is an agreement between the company and the union. Okay. If you are looking at financial year X1, X2, so this ends on 31st March X2. Yeah. So this arrangement, where does it start? June X1. This amount has been settled up to May X1. Sorry, May X2. Now, we are required to look at the accounting for financial year X1, X2. Now, please don't forget that this is the period that we are going to look. So that's why liability for this period, do we need to consider? No. We will only be looking at the liability for this period. That means June to March. Correct? Now, as regards this period, the amount which two parties have agreed. So when they have agreed, company has agreed that company will pay. So that means there's nothing which is contingent. Yeah. The only point is that this has to be paid in future at the time of retirement. Yeah. So that's why what do? You will create a provision here. There's no question of contingent liability. There should be a provision here for this period. Correct? Clear on this? Everyone clear? Any questions, any doubts so far? Everyone clear? Any questions? Any doubts if you have? No? Charandeep says June to May. Yes. Okay. Priya is saying, sir, in part 1, there is contingent liability because there's a case of litigation. Yes, that's correct. But in part 2, see, in part 1, it's a matter which is under discussion. Company is evaluating whether it will be required to be paid or not. Okay, so that assessment, company is thinking. Okay, but over here, it's gone. Ron is asking, sir, hike means increment, increase. Okay, clear? Now, as regards these provisions, please understand that these are estimates. Okay, so that's why these estimates may require revision also. So whenever you change the estimate, that has to be recorded prospectively. Ishan is asking, but sir, it is 100% certain of occurrence. So why not a liability? Because it's going in its timing, you don't know today. Ishan, because it's timing, you don't know today. Okay, let's think about it. So today, when you have this liability for, say, 100 employees, so you are estimating this. Now you don't know whether those 100 employees will continue till retirement or not. So the question specifies that will be paid to them at the time of retirement. Let's suppose out of 100, 90 retire. 10 have left to whom this amount may not be payable. Remember, post-employment benefit we computed. Okay. And who is going to retire when? If let's suppose you say no, whenever they will leave, they will have to be paid. Maybe at the time of retirement age or before that. So you don't know as to which employee is going to leave at one point of time. So that's why it's a provision. It's not a liability. Clear, Shan? Shan, clear? Okay, very good. So then I can see one more query. Priya is asking, company could have lost the case. So the company, yes, Priya, you are correct. But because the question was silent on this, so that's why you can say you will create an assumption. Okay, when the question is silent, but you will have to do the assessment or the assumption which is more appropriate looking at the situation. Okay, when the company is clear that they are going to lose the case, even then they are getting into a litigation, doesn't make sense, isn't it? Of course, you can make that assumption, but that doesn't make much of a sense. Yeah, Rohan, can you please speak up? What is that part which you could not understand? Yes, quickly, please speak up. What is that part which is not clear to you? Yes, Rohan, please go ahead quickly. Please speak up. Can you just go back to that?
Sir, I could not understand that why for June X1 to March X1 you have created the provision.
Okay, so now in terms of, so question you have understood. Rohan, you have understood the question?
No, sir.
Okay, so let me just explain this question again. So between the company and the union, okay, so there's a labor union, let's suppose. Labor union, you understand what is a labor union?
Yes, sir.
Yeah, so labor union is a, you can say, a body which will discuss a lot of requirements, rights of the labor. So they have agreed and they have entered into a contract. So what did they decide? That there will be a revision in the wages of labor starting from 1st June 2000 X1 up to 31st May X2. So that's what they decided. Okay, but this revision, let's suppose they have decided that this revision has to happen, and this revision, let's suppose it amounts to rupees 40 lakhs. Say the amount for this revision is what? 40 lakhs. So they have also agreed that this will not be paid in May X2. When will this be paid? When the employee will retire. Okay, so it will be settled at the time of retirement. Clear?
Yes, sir.
Company is saying that, okay, if I am not required to pay to the employee, don't worry, I'll deposit it anywhere. Okay, so it's a money which is lying on behalf of employee in a way because I have to pay to them. I'll not pay them, I'll pay them at the time of retirement. Till then, I will invest this in the government bonds. So this is what the generally company will do.
Yes, sir.
Yeah. So that company has a reserve, as and when employee will retire, company will pull out the money, pay to the employee. Okay. Similar to what you see in case of post-employment benefit. Isn't it? Yeah, it's similar to that.
Yes,
Now,
sir.
in this case, the question arises, how should this be recorded by the company? So now, if you are looking at financial year X1, X2, where does this financial year end? 31st March
31st.
X2. So that means for the period from 31st March X2 to 31st May X2, do we need to look at the accounting requirement? No. So that's why we have ignored this. It's not relevant for us. So what is relevant for us is this period. This period. 1st June X1 to 31st March X2. Now for this period, will the company require to recognize an expense? Tell me. Tell me. Will the company be required to recognize an expense or not? Tell me, Rohan.
Yes. Yes, sir.
Yes. So how do you recognize an expense? By creating a provision?
Yes, sir.
Okay. So that means for this period, if we assume the amount to be 40 lakhs, a provision of 40 lakhs will be recognized.
Okay.
Clear?
Sir, if financial year was given 20x2x3, then
20x2 x3. Then you tell
yes,
me what should we do? You tell me in fact.
another 40 lakh we have to record as
No, so how do
provision.
you know another 40 lakhs? This 40 lakhs is only an example. Question is not talking about 40 lakhs. Huh? So in such a case, what will you do? You will say for the period from 1st April X2 to 31st May X2, you will create a provision.
Yes, sir.
Yes or no? Then in such a case, for what period you will create a provision? For this period. For these 2 months.
Yes, sir.
Correct? See, the amount
Yes.
is not given. So you cannot specify the amount in the question. Amount I've taken just to help you understand. Okay.
Sir, since it is paid at the time of retirement, we
It
have
will
to,
be paid at the time of retirement.
whether we have to calculate any present value.
Yes, of course, you will have to compute the present value if the future value is given to you. But most
Okay.
likely the question will give you the present value. See, if the question gives you the future value, then you will have to compute the present value. What if the question gives you the present value? You will not be required to do any sort of calculation then. See, the question
Yes.
will want to test your accounting knowledge. Computation of present value against the future value is not the accounting. That's more of arithmetic, something that you do in case of financial management. Okay. So over here, your expectation should be around accounting requirement, not the legal requirement. Okay. Not the taxation requirement, not the requirement related to financial management. Understood? So that
Yes,
is
sir.
going to be the focus. So it has to be subject specific. But again, any of these things could be there in the exam. Fine.
Yes, sir.
Okay. Any more questions? Anyone else? Jayendra is saying, what will be the entry? Entry is simple, expense debit to provision. I think Ishan, we have already discussed the accounting for next year also. Ishan, clear on that? I think we just discussed that. Jayendra, clear? I think we have discussed the accounting entries also. Okay, great. All right. So now, if let's suppose a provision is created, say rupees 40 lakhs. So next year, what will you do? You will reassess the provision. Why? Because provision is an estimate. So that's why it's required to be reassessed. If there is any change in the provision in the next year or in the next years, how will you record it? Prospectively. Okay, it's like a change in estimate. It's like a change in estimate. Clear? Now, let's pick up some more concepts. See, the standard also talks about contingent asset. Now, contingent asset is something similar to what you see in case of a contingent liability. Okay, very much on the similar lines. See, if the asset is virtually certain, if the asset is virtually certain, then what will you do? You will recognize that as an asset in the books of accounts. But if in respect of any benefit, any asset, some contingency is attached, okay, any sort of contingency is attached, for which certainty is not there, then what do? You will disclose it. But this is not disclosed in the financial statements. It is disclosed in the report of approving authority, means in the director's report is disclosed. See, this is something which is very rare. Contingent asset you'll hardly get to see in the financial statements or even in the director's report. This is something which is rare. Yeah. Now, there's one more aspect of this standard. Let's talk about that aspect also. That is about restructuring. Now, what is the meaning of restructuring? Let me just help you with the meaning of restructuring first of all, and then we'll get on to that guidance also. So what is restructuring? Let's understand restructuring. Restructuring could be of any sort on the part of the entity. Say a company is there, Q Limited. It has got 3 units, Unit 1, Unit 2, Unit 3. Unit 3 has been making losses significantly year on year. So that's why company plans to discontinue this. So this is what you call as restructuring. Okay. Discontinuance of any lines of business, changes in the organization structure, changes in the management. There could be any sort of restructuring which is possible in case of an entity. Yeah. Important point for us is what? For us, important point is to understand that whenever there is any restructuring in the organization, does it require any provision or not? Okay. Does it require any provision or not? Sale or termination of a line of business, closure of business locations, one of the business locations, change in the management structure, maybe CEO has been terminated. Okay, now a new CEO is going to come up. Okay. Now, because of this restructuring, if any cost arises on the part of the company, so what will you do? You will have to assess whether it meets the criteria of a provision or not. If yes, then such a provision is required to be recognized immediately. But in this case, standard talks about certain conditions. Standard says that such scheme of restructuring should have been approved. Okay. For example, if a unit is planned to be sold, so there has to be a board approval in place. Further, the company should also be actively involved in the sale of that business unit. Maybe the company may have identified a buyer with whom the sale agreement may have also been executed. The sale transaction is yet to take place. Okay. In such a case, some of the costs may be involved. Yeah. If such costs are required to be involved, so what do you do with that? Recognize that immediately. Now, what could be the costs for this active search of a buyer? Some costs may have to be incurred. When you move some of the employees who were working in that location, so you may be required to pay some amounts to them. Yeah. Or maybe you are moving some employees from Unit 3 to Unit 1 or Unit 2. So their movement costs. Yeah. So any of the costs which are associated with the restructuring, that is what you call as restructuring expense. So how do you record them? Restructuring expenses are required to be recognized in the P&L immediately. Okay. So they are required to be recognized in the expense immediately. Clear? Everyone clear on this? Clear on the restructuring as to what do you mean by restructuring? Yeah. So let's look at this example now. Okay, so let's look at this example. At the end of financial year ending on 31st December, so we have this calendar year now. Company finds there are 20 lawsuits outstanding which have not been settled till date when the approval of accounts has taken place. Possible outcome for all of these litigations are given. In respect of 5 cases, company is expecting to win. Probability is 100%. next 10 cases. Okay, 50% chances to win, lose. If the company loses, so there's a 40% chance. And in respect of that, there will be low damages amounting to 1,20,000. If the company loses and it results in a high damage, chances are 10%. So 2 lakhs is the amount involved. For the remaining 5 cases, of course, if the company loses, there's a 30% chance of low damage. There's a 20% chance of high damage, and the amount involved is also given to you. Okay, then moving further. Okay, in this case, outcome of each case is to be taken as a separate entity. Ascertain the amount of contingent loss and the accounting treatment. So let's try to understand this. Contingent liability is required to be disclosed if the following conditions are fulfilled. There's a present obligation resulting due to past events, but that is not recognized as a provision. Okay, so of course all of these conditions are there. We have just discussed. In the given case, probability of winning of first 5 cases. So if you look at the first 5 cases, is 100%. So therefore, there is no contingent liability. Okay, so it's a remote one. Yeah, so you don't do anything. Probability of winning the next cases is 50%, and for the remaining 5 cases is 50%. So therefore, we make a provision if the loss is probable. As the loss does not appear to be probable, possibility is there. Therefore, a disclosure will be required by the way of notes to accounts. Why? Because 50% chances are there for winning, 50% chances are there for losing. So therefore, next 10 cases, what do you call them as? Contingent liability. But how do you ascertain the amount? Very simple. What is the chance of this damage of 1,20,000? 40%. So 40% of 1,20,000 you will take. And what is the chance of damage of 2 lakh? 10%. For the chance of damage of 2 lakhs, 10%. So therefore, 10% of 2 lakhs you will take. Clear? Yeah. So in this case, for the next 10 cases, what is going to be the amount of contingent liability? 68,000. Similarly, for the next 5 cases means these one. Can you compute the amount of contingent liability for these next 5 cases? Over to you quickly. For these next 5 cases, can you compute the amount of contingent liability? Over to you quickly. Yes. Can you compute that quickly? Ishan has got this. Ishan is saying 3,60,000. Okay. What about others? Devu is saying 72,000. Quickly. Soumya, Rohan, Sunil, they are also getting 72,000. So maybe Ishan, you can check up as to how did you get this. Okay, Ishan is saying 72,000 for 1. What do you mean by 1? I'm not sure. Okay, Chirandeep has shared the calculation. Tanisha is also getting 72,000. Tanu is getting 72,000. Kirti is also getting 72,000. Fine. For 1 lakh, you will take 30%. For 2 lakh 10,000, you will take 20%. So that's why total amount for next 5 cases will be what? 72,000. So we have 2 contingent liabilities for 10 cases and for 5 cases. Correct? Correct? Now, for first 10 cases, for each case, what is the amount of contingent liability? 68,000. So for 10 cases, what is going to be the amount? 6,80,000. Okay. For next 5 cases, for each case, the contingent liability is 72,000. For 5 cases, it will be, of course, the amount that you compute. So all in all, your total contingent liability will be what? 10,40,000. 10,40,000. Okay. Clear on this? Everyone clear on this? 10,40,000 will be the amount of the contingent liability. So now what we will do is, let me just take you to the presentation. Now we'll also look at some more small examples based on the similar principle that we have discussed. Yeah. Okay, so let's look at this. After a wedding in 1415, 10 people died, possibly as a result of food poisoning from the products sold by the enterprise. Legal proceedings are started seeking damages from the enterprise, but it disputes liability. Up to the date of approval of the financial statements for the year ended 31st March 15, entity's lawyers advise that it is probable that the entity will not be found liable. However, when the entity prepares the financial statements for the year ending March 16, its lawyers advise that owing to the developments in the case, it is probable that the entity will be found liable. Okay, so there are two cases, there are two financial years. 1415, 1516. So tell me, what should be the accounting in both the financial years? Over to you, quickly. What should be the accounting in both the financial years? Over to you, quickly. Who will explain this? Somebody needs to raise hand and also explain me. Chirandeep, will you explain this? Can you please pick up? You have answered this. Can you please explain me the reason why you are answering this? Over to you, quickly. Very good, Chirandeep. Yes, please explain. Yes, Chirandeep. Yes, Chirandeep, please go ahead. Manish, can you please unmute Chirandeep? Yes, Chirandeep,
Hello,
please
sir.
go ahead. Yes.
Sir, in 2014-15, nothing is required to be shown
Why?
because remote chance.
So what makes you it's remote? Yes, please try to explain. What makes you say it's remote?
So because it is probable that enterprise will not be found liable.
Very good, because it's probable. Now with the probable, you should not get confused that every time you see the wording, you call it as a provision. Okay, so in the given question, what do you find? Probability is there that the company will not lose. So that's why it's a remote situation. Yes or no? So probability is company will not be found liable. Correct? Okay, now
Yes.
for the next year, Charandeep, for 15-16, what is your answer?
So
What
next
should
year
the company
provision.
do? Next
Provision
year
should be made.
provision. Why provision?
Because enterprise will be found liable. Probable that enterprise will be
Right.
found liable.
Because if you go to next year, in the next year, there is a probability that entity will lose. So therefore, in the next year, company will have to create a provision. Okay, clear? Everyone clear
Yes.
on this? Great, Chirandeep. Thanks. I
Thank
can
you.
see a lot many other students also answering this. Yeah. All right, very good. So I think we can look at the next question. I think Rohan, you have a point. Yes, Rohan, please go ahead. Yes, Rohan, please go ahead.
No, sir. Nothing.
Okay, no worries. All right, so let's look at the next one. Government introduces a number of changes to the income tax system. As a result of these changes, an entity in the financial services sector will need to retrain uh, a large proportion of its administrative and sales workforce in order to ensure continued compliance with financial services regulation. As at the balance sheet date, no retraining of the staff has taken place. So what is your thought on this? How will you consider this? What is required to be done? Over to you quickly. Great. Priyanshi, yes, please go ahead. Yes, Priyanshi, please go ahead.
Yes, it was estimated that the retrain will take place, but at the ending of the financial year, at the time of balance sheet, no retraining taken place. So it is a clear chance of possibility which is 50-50.
Okay. So what do you do then?
Possibility. I
So
mean,
what do you do?
disclosure.
Okay, so you are saying disclosure is required. Disclosure is required for what? So what will the company disclose?
That the retrain could take place at the end of the financial year.
Okay, you're saying the company will disclose that the retraining cost will arise. Is it?
Yes.
Okay, but in this case, let's try to understand. We are looking at a financial year. Say this is 24-25. Up to 31st March 2025. We need to ascertain three things. Correct, Priyanshi?
Yes, sir.
Whether there is a probable outflow, whether it's a possible outflow, or whether the outflow is remote. In the given case, do we have actual outflow? No.
No.
Actual outflow is not there. Okay. Important point is up to this date, actual outflow is not there. Next question is, okay, actual outflow has not happened, but accrual concept one needs to follow. So going by the accrual concept, staff will have to be trained again. That's a mandatory requirement. If the staff is not trained, it will create a problems. But has the company incurred any costs in relation to the training of the staff? No. So it's a future cost. As and when the staff will be trained, that cost will be recognized. So during this year, there is no cost. Yeah. So that's why there is no obligation on the part of the company. So no provision will be recognized. Clear?
But it was estimated that it will be occur, so it could be
Yes.
provision also, that it was the more than 50% chances was estimated that it will occur.
No, let me just say there is a 100% chance that this cost will occur. You are saying more than 50. Let me call it as 100% chance. Okay. Now the question arises that in respect of this cost, which is 100% sure company will incur, when do you record that in your books of accounts?
When it
When
actually
you
incurs.
have incurred the cost.
Hmm.
If you follow accrual concept, when do you record? When you have incurred the cost. Have you incurred the cost up to 31st March?
No.
No. So even if you estimate that, can you record that? No. For example, company will continue to run its business in future. Do we have any doubt on that?
No.
In the future, company will pay salaries to its employees. Do we have any doubt on that?
No.
So does it mean that all of these future salaries should be recorded in 24-25? No. Why?
No.
Because it's a future cost. Of course, you will create a provision in 24-25. You will follow accrual concept. but that will be only in respect of those expenses which have been incurred, which have been accrued. This cost has not been accrued as yet. Company is committed towards this cost. Okay, company is saying that company is committed, but commitment doesn't mean you will record everything today. Understood?
Yes, sir.
Okay. All right. So let me just take this next one. So this appears to be a bit simple. Let me see who will answer this. A manufacturer gives warranties at the time of sale to the purchasers of the product. Under the terms of the contract for sale, manufacturer undertakes to make good by repair or replacement manufacturing defects that become apparent within 3 years from the date of sale. On the basis of past experience, it is probable there will be some claims under the warranty. So what do you do in this case? I think we have already discussed this. What do you do in this case? Tell me quickly. In this case, what do you do? Create a provision. Very good. Tanisha, Prem, Rohan, they are saying create a provision. Why? Because now cost has been incurred. Why this has been incurred? What is our obligating event? Our obligating event is the sale. Okay, so that's why we are looking at this probability and creating a provision today itself. Clear? Clear on this? Okay, so I think this is it that we had on our discussion for today. Any questions, any doubts that you may have? Now we can discuss that. Otherwise, we are through. We can just close our discussion. Thanks everyone. If you do not have any queries, you can just feel free to move. Thanks everyone for your time. Yes, I think Ishan, you have a query. Yes, Ishan, please go ahead.
Sir, I have a query in illustration 3.
In
illustration 3.
illustration 3. So illustration 3 on the presentation that we discussed.
Yes, sir.
Okay, let me just go back to the presentation. Just a minute. Yes.
So the previous slide. Illustration 2.
This one too?
Yes, sir.
Yes.
Sir, if in next year we do not incur the expenditure for few months, but we we do not incur till June 25, but we incur in July. So we will not make a provision in June also.
So are you talking about quarterly reporting?
Yes.
So how is this relevant? That's what I'm just trying to understand. You are saying that for the June quarter, for 30th June 2025, will you be required to report the numbers anywhere?
No, sir. I am asking like in 24-25 we didn't incur any expenditure, so we didn't recognize it there.
Correct.
So if we do not incur any expenditure from 1st April till June 25,
right?
So then also we will not incur. Then also we will not recognize there.
So see, it's a cost. So whenever you incur that cost, that's when you recognize. If you are saying that you have sorry.
But the provision need to be made before incurrence of cost.
Provision needs to be made before incurrence of the cost when you have incurred that expenditure. Okay. Now let me just give you one example. Say for example, say this is 25-26. Okay. You are saying on 31st July 2025, you have received the invoice. Let's suppose you have hired the trainers and they have shared the invoice. The invoice has been received on 31st July 2025. But the training started from 1st April 2025. Okay. Now your training cost has been incurred starting from 1st April. Okay. So therein your point is correct that every month the cost you have been incurring. So you need to record that. If let's suppose invoice is not received for the month of April, so will you not record that? You will record. Okay. But why will you record it? You will record it because the cost, you know the amount of the cost. So that's why you create a provision. So in this case, you will create a provision. Clear on this? Ishan, you're there? Clear?
Yes, sir.
All right. Anyone else? Any more questions? I think Priya has a query. So Priya is asking, sir, if this line had not been mentioned that at the balance sheet date, no retraining of the staff has been taken place. So was there a need to create a provision? See, there again, it's one and the same thing. Important point for you to understand is that in this case, whether the company has incurred the cost or not. Okay, it's exactly similar to this example which I have just shared with you. If let's suppose in 24-25, the question was saying that the company has incurred the cost, but company is not able to ascertain the exact amount. Why? Because the exact amount is under discussion with the vendor, or this is under negotiation. Okay, so therein you could have estimated the amount and created a provision. Otherwise not. Okay, clear on this? So Rohan is asking for the examples of contingent assets. As I told you, these are very rare. I've never seen that any company disclosing that. But just to give you an example for that could be, say for example, a company got into a litigation. Let's suppose there's a tax demand. Fine. Now in case of this tax demand, company got into a litigation. Okay. So there's a demand of say 10 crore, company got into a litigation. And while getting into the litigation, company has also deposited some amount. Let's suppose 1 crore has been deposited. Okay. Now, when this amount has been deposited, sometimes what the companies do is companies record that as an expense. That's something which the companies do at times. Now, in respect of this 1 crore, if let's suppose now the company has won the case, but the department has went into a further litigation at a higher level. So now there again, you don't know whether at the higher level you will win or lose. But because you have won at the lower level as a company, so that's why you will say it's a benefit which you are expecting, and it's bit contingent. Okay, so that 1 crore which was recorded as an expense in such a case, you can consider that as contingent asset. Yeah. Ishan is asking, sir, if this amount is known and it is not incurred. No, see, provision is something, please do not get confused around provision. Provision is what? Provision is nothing but an expense. And an expense you will record only and only when you have incurred that. If you do not incur that, you can't record. Okay. Soumya is asking, sir, in the last example, if the purchasers do not claim, okay, in this one, in the warranty, if the purchasers do not claim, then what do you do? Then of course, let's suppose in 24-25, you create a provision. Say the provision is created for 10 crore. Now let's suppose next 3 years. Though it's again practically not possible, but if I go by this hypothetical situation you have shared, if let's suppose there's no claim received, then what will happen? This provision will have to be reversed. Okay, but please remember that because it's a provision, it's an estimate, so every year some reassessment will be required. So when you reverse it, it will not be reversing entirely in third year. So it will be reversing in each of these next 3 years, first year, second year, 3 year. So that assessment will have to be done by the company each year. Okay, and the company can't say that in the third year they have done this complete assessment, and in the third year they get to know that nothing is going to come. Okay, otherwise that will be wrong. That will be incorrect estimate on the part of the company. Fine. Any more questions if you have? Any more questions? Any more doubts? Or we are through? Okay, Devi has a query. Devi is asking, any one element, timing or amount is uncertain? Yes. Anyone? Yes, that's correct. Ron is saying how to classify a provision into short term. Once again, the same thing, and on the same example of warranty, you can consider it. Let's suppose you have this warranty of 10 crore. Yeah, you estimated. And what is your estimate? That this warranty provision will be actualized in next 3 years. So this is year 1, 2, 3. Now, as a company, you will do the assessment that in the next year, what is the amount of provision you are going to incur? Let's suppose company says 2 crore. So this 2 crore will be short term. Remaining 8 crore will be long term. So that's how you'll have to do this. So current and non-current criteria will remain same. That is not going to change. Okay. Ron, clear? Are they be clear on this? Rohan is saying long term. So long term, I'm saying out of 10, 2 is short term, 8 crore is long term. That's an example of long term only. Okay. All right. Any more questions if you have? No? So we are through? All right. So if you are done, let's close our discussion. But I would request that please make sure that you revise whatever we have covered today. Okay. So thanks everyone for your time and for this wonderful participation once again. Thanks so much. Over. Yes, Manish. Thanks.